from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, temporarily on hold. Elon Musk creates chaos with early morning tweets causing confusion over his deal to buy Twitter. The company's current CEO speaks up. We will talk to a founding member of the early Twitter team about where this chaos is headed. Plus, Reid Hoffman joins me for a wide-ranging conversation about just where this chaotic market cycle is headed and what it all means for startups. Plus, his thoughts on, of course, Twitter and his former colleague, Elon Musk. And $200 billion wiped off the crypto market since the start of the sell-off. Just how cold will this crypto winter get, and how long will it last? We will get to all of that in a moment, but first, stocks bouncing back after a wild week of swings. Fed Chair Jay Powell saying bigger rate hikes are off the table for now. Bloomberg's Ed Ludlow here to wrap up the week that was. Ed?
Yeah, how was that market going to react? We stood here 24 hours ago and we said, how's the market going to digest Fed Chair Powell saying 50 basis point hikes at the next two meetings is appropriate? This is how. Relief. Green on the screen after a week that's just been rife with volatility. The NASDAQ 100 up 3.7%, very tech-heavy index, as you know, Em. That's its biggest jump since the middle of March. And broadly, this risk on sentiment, you see there the yield on the US 10-year Treasury up by around 7 basis points. This kind of risk on end to the week where we're taking a beat, we're being calm. Bitcoin also recovering. You see it at 29,000 US dollars per token. It had been down towards 25,000 US dollars per token at one point in the week. But then you step back and come with me into my Bloomberg terminal and we look at this chart. 6th straight week of declines on the NASDAQ 100. The momentum is clearly going in one direction. We're clearly in bear territory when it comes particularly to the technology sector in the equities market. We're asking still, where is the bottom? What is it going to take for us to change direction and turn a corner with selling pressures in some of the sort of riskiest parts of this market? And at the same time, you have volatility coming from somewhere else, from someone else, Elon Musk. Twitter down 9.7% during Friday's session. As you said, Elon Musk tweeted that the deal to buy Twitter was temporarily on hold. Why? The company had released a regulatory filing saying that less than 5% of users on the platform are bots. He took exception to that, apparently, but later clarified he's still committed to the deal. Interesting to see a relief rally of sorts again in Tesla stock, up almost 6%. Perhaps a step back from that Twitter deal gives Tesla investors some confidence that at least whatever happens, it will be more favorable to Elon Musk's Tesla holdings. What a week, Em. What a week.
All right. Ed Ludlow, indeed. Well, the back and forth from Musk continuing. As we said, early Friday, he tweets the Twitter deal is temporarily on hold. But as Bloomberg Opinion's Matt Levine points out, that's not actually a thing. He says Musk signed a binding contract that doesn't allow him to just walk away, even if it turns out that spam accounts do represent more than 5% of Twitter users. Musk later saying he's still committed to the deal, but it's all casting doubt on what actually happens to Twitter. For more on this, I'm joined by Jason Goldman. He was part of Twitter's founding team, a board member from 2007 to 2010, and also the White House chief digital officer under President Obama. So, Jason, you did not mince words about this in your tweets. And to put it in words appropriate for our television audiences, you say either way, Twitter faces a not good outcome. Why?
Well, because either Elon's going to acquire the company, and he's shown to be how unserious he is about the whole proposition, and his ideas around what he wants to do with it are unserious, or he walks away from the deal, which is basically a one-sided option that he holds at this point, and the company is left in a situation that is increasingly chaotic and difficult for them to manage.
How big is the bot problem really, though? I mean, does Elon have a point?
No, he doesn't have a point. It's not a serious point. Like, I think it's fine to report that that's the reason he said the deal was on hold, which is, as Matt Levine points out, isn't a real thing. The bot thing isn't a real thing either. We don't have to look very far to prove that we know that's not the real reason for what's going on here, because on April 21st, Elon said, if our Twitter bid succeeds, we will defeat the spam bots or die trying. He set himself up to say that he was going to take on this big bot challenge, which I don't think is a significant problem. And now he's saying the exact opposite, which is, well, I'm just going to not try at all to deal with the bots.
You tweeted, we went through a lot of episodes of soul-crushing drama in the early days, a lot of it self-inflicted, but this really has to be the worst ever. And I'm sorry for all the folks at the company who are somehow expected to just do a job through this mess. We know that a couple of Twitter executives were let go yesterday. The company now has a hiring freeze. They're trying to cut costs. They might rescind some offers. What's it like being a Twitter employee right now?
Well, yeah, I mean, the rescind offers is a very serious step, right? I mean, that's people who've accepted a deal with Twitter, turned down other offers potentially, and now being told they don't have a job. And to be told there's a hiring freeze and you're letting go top executives, that's why Elon walking away from the deal is also quite bad for the company, because you're now talking about a company that not only has hamstrung itself in terms of its hiring and sent a mixed message to employees about what the future is, but you're also dealing with a situation where the board of the company has said, we don't have any better ideas than selling to Elon in terms of what the future should hold. So it's just put the company in this very precarious death spiral.
Now, Parag Agrawal, the current CEO of Twitter, took some responsibility for the changes that he's making. He said he's not doing this because, you know, he's a lame duck CEO or just to keep the lights on, but he's thinking about the health of Twitter's business and preparing for all scenarios. What do you think that means? Do you think if Elon Musk wasn't supposedly buying the company in a matter of months that he'd be doing this?
Right. I mean, I think that's what Parag has to say. And it is his prerogative to have the executive team around him, even if it's for a short period of time. And, you know, I give Parag a lot of credit because comments that were leaked from the town hall a while ago said, you know, I've only been on this job 4 months, but I've been at the company for a decade. And yes, we could have done better to avoid this sale. Unlike a lot of other people on the board or Jack, the founder, who said this is the only way out, Parag took a lot of responsibility to say we could have done better to avoid this outcome. So I think it's fair for him to say now, like, I'm going to position this company in the best way I can to lead to whatever exit or whatever endpoint we're leading towards. It's just that none of those options are very good when you can't even hire new employees right now.
You've got Snoop Dogg jumping into the fray saying we might have to buy Twitter now. What about another scenario here? Somebody else, Snoop Dogg or not, I saw someone ask you about whether Google could make sense as a buyer. What about if someone else buys Twitter? Could that happen at this point?
Google's approached the company a number of times. I don't know about since the time I left, but we were in conversation with them at least twice when I was there to potentially buy the company. I don't know what the regulatory hurdles are for Google to buy it at this point. And certainly I think it's more difficult for a company like Facebook, who also tried to buy Twitter a number of times, to buy the company. So it's difficult to see those kind of outcomes. But I think if Elon walks away and the stock price continues to decline, other options certainly would be on the table.
Now, speculation has been made that it's Friday the 13th. Maybe Elon Musk is just trolling us all. What do you think?
Yeah, absolutely. I don't think he's a serious person. And I don't think the way that he's approached this on bots is serious either. It's certainly not about bots. I think the most credible take is that he wants to renegotiate the price. And certainly he's got the board in such a position where they agreed so quickly and said they saw no other options. And Jack said that Elon's the sole solution to the company's problems. That Elon would be able to say, well, if I'm the sole solution, I'm the only option here, then I think I should be able to set the price, particularly as you led off the show, the tech market has declined precipitously since he started buying up the stock. So I don't think it's serious. I don't think he's serious about bots. I don't think he's been serious on his positions about free speech. I don't think he's been serious on his ideas with putting the algorithm on GitHub, which isn't even a technically sensible idea. I think this is all a way for him to be in the headlines, have people talking about him. He'd like to own it if he probably can get it for a better price now, but he doesn't really have any ideas what he wants to do with the company. And every additional turn of the crank where he talks about what he wants to do, whether that's the business plan that leaked to investors, or when he talks to folks about his free speech ideas, reveals how unseriously or how uncritically he's approached this. And I think that is why the company is in such a predicament.
And just to remind our viewers, he tweeted that he's still committed to the deal. He has signed a binding contract. But Jason, always appreciate your opinions and your take on what's happening here. One of the founding members of the early Twitter team, Jason Goldman, thank you. Coming up, Reid Hoffman, partner at Greylock, co-founder of LinkedIn, his thoughts on the markets, what it all means for entrepreneurs, and of course, his take on Twitter and Elon Musk. He joins me next. This is Bloomberg. Trillions have been wiped off public markets in the last few weeks, a lot of the pain coming from tech stocks. Saudi Aramco this week replaced Apple as the world's most valuable company. The turmoil has led to hiring freezes and even layoffs at public and private companies. So where are we now in this cycle, and just how bad will it get? I'm joined now by Reid Hoffman, who's been building and investing in tech for decades and knows a thing or two about ups and downs. He's also the co-founder of LinkedIn, of course, a partner at Greylock, and out with an updated version of his #1 best-selling book, The Startup of You, which came out 10 years ago and is being re-released for a new generation. Reid, always great to have you back here on the show.
Always great to be here.
We're going to get to the book, but I want to start with the mood. Given all of this market turmoil, valuation cutdowns, trouble fundraising, what is the mood among venture capitalists right now? How dire is it?
Well, I definitely think the mood is troubled and expects more volatility to be coming rather than less. But on the other hand, I think that technology is still very strongly the future. And so I think the question isn't, oh my God, flight from technology. It's more, there'll be more volatile fundraising. It won't be as easy. There won't be as much capital available. Some businesses will be much harder to raise than for others. And so, sort that out and be careful about that. Check your balance sheet, check all that. But we still think technology and technology investing is year by year, where we'll see most of the growth and most of the change in industries in the world.
An investor at Activant Capital, Steve Saraceno, told me he thinks millions of people are going to lose their jobs in tech and that it's going to be absolutely shocking for the industry. Do you agree?
Fundamentally, no, but it's not because I don't think there will be a number of companies that have gotten over their skis, have started investing, have burn rates that are far above their revenue. We'll do a reset. Generally public market companies will have to show that they're disciplined in their operating margins and their revenue. And so I think you will see layoffs. But the thing is, I think capital still goes, technology is the future. So I think that, for example, people who get laid off in one company might have 3 other job offers in other companies that actually, in fact, are hiring. So it isn't quite that dramatic, like, oh my God, there's going to be all these people out on the streets. It's actually going to be, there'll be a shuffle for talent and companies, shuffling to ones that perhaps have either deeper piles of capital or more revenue that's going.
Now, others have told us they're saying batten down the hatches, cut costs, build what matters. What are you telling your portfolio companies right now? What are the top 3 bullets?
Well, it depends on the company. So obviously, if you have a place where you have a deep well of capital, good revenue, good growth, actually one of the places where you can tell the strong companies from the weak is you keep investing into where you're heading. We did the same thing when, for example, LinkedIn in 2008. It was like, okay, we have a chance to invest in the future here. And so when you have companies that have the ability to make that play, you take that play. On the other hand, of course, if you say, well, we're still figuring out product market fit, we don't quite know how it's going to go yet, or we want to maintain our burn rate relative to having extra months to choose our market, which we want to raise future capital, then be more disciplined about hiring, be more disciplined about expenses, and predict for the future.
Is this like 2008? Is this like the financial crisis or the dot-com bust, or is this something completely different?
Well, I think it's different in part because while, for example, there is a real shift in the market, obviously everyone in the last couple of weeks across a number of things, I think there's still a lot of capital that says, okay, if I were choosing where growth will be, where the future of industries will be, where the future of kind of new revenue streams, new businesses will be, technology is still it. It just now won't be all technology. If it seems new and interesting, throw money at it. It'll be, okay, a little bit more disciplined about, well, actually, in fact, this is a good industry of the future. Let's bet on that.
Now, in the startup of you pioneered this idea that anyone can be an entrepreneur. What is your advice to a new generation in this environment about how they take control of their own careers when a lot of people are reevaluating life and work?
So the basic idea is careers are now much more like a startup than they are like a career ladder, career escalator. You can call it a jungle, you can call it a jungle gym. You have to actually be maneuverable and flexible. Adaptability is the new stability. And so the tool set for entrepreneurs, even if you don't start a company yourself, is the tool set for every professional, for every worker, for every career path. And the book is trying to say, well, here's the basic set of the tool sets if you would like to run your career in this modern entrepreneurial adaptable way.
Now, someone else who seems to be at an inflection point in his career is Elon Musk, taking on the possibility of buying Twitter. I know he's a friend of yours. He was your colleague at PayPal. How bullish are you on the future of Twitter under Elon Musk?
Well, I saw your earlier interview with Jason. I thought it was very good, by the way. And basically, I think everything he was saying about Twitter and Twitter circumstances is correct. I think it hasn't innovated nearly as much as it could have or perhaps should have, in the last decade, 5 years, whatever it is. I think one of the great things about Elon is he is one of the world's most amazing innovators. I actually do think this is counter to what Jason was saying, that he has a plan, that it's an interesting plan. Yes, the bots thing may or may not be fully on target or not. But actually, in fact, I think he's an active user, as we can tell in the last couple of days even, and he has a sense of where the product could go. And Elon is always a product-oriented entrepreneur and inventor, and so I think he actually has a plan and has something that he's interested in doing. But I think it's obviously the tweets of where are we going with the deal and so forth are not great for stability within the company and the employees and knowing what's going on in the future.
So you think he's serious? I mean, if you were on the other side of this deal, wouldn't you be frustrated about all the back and forth?
Well, of course you should be frustrated because part of being a little bit more like tweet in the morning saying it's on hold, tweet a little later saying I'm still committed, is needless thrash on this. On the other hand, I think Elon is also very exciting about, here's a person who revitalizes the space industry, who, brings on the future in green cars and a bunch of other things. So I think there's a bunch of very interesting things that are possible with the innovation. That's great. I think that the volatile tweeting, perhaps, a little less great.
Now, we're coming up on almost 20 years since you founded LinkedIn, and I wonder if this could be the moment where the new social network of the future gets born. Is the market, our users, is even Elon Musk saying we need something new?
So I think we almost always, like for example, if you said, will there be a new social network 5 years from now that we don't see right now? The answer is almost certainly yes. We wouldn't necessarily have predicted TikTok coming in thinking, oh, all that video stuff is already owned by YouTube. I think we will see it. Now, the interesting question, of course, part of what my job's about is trying to figure that out and predict it and invest in it early. I do think that Twitter has great potential to it. That's actually one of the things that is most exciting in all of this. And I think that being able to work towards that potential is huge. But by the way, in terms of a new social network, I think you will see one in the next 5 years. Where it will come from and which country it will come from, I think is very much TBD.
We're coming up on the anniversary of the Facebook IPO as well, and you were an early investor. I know that you have been frustrated, and you've expressed that with us, with some of Mark Zuckerberg's decision over the last few months, particularly around the whistleblower. But what do you think about the vision for the metaverse? Are you bullish on that?
Well, so I haven't actually talked to Zuckerberg about that at all. I tend to be a little bit more cautious on the metaverse, thinking of than off a wide variety of things, startups and everything else, just because I think that what we'll first see before we see deep social applications or work applications is deep entertainment applications that have a broad-based appeal and interest. And I haven't seen those yet. I've seen, kind of specific ones. And what they've done with Oculus is really amazing. But I think we're still some ways away from call it mass adoption of the metaverse. Or maybe we should call it mass-verse adoption or something like that.
Now, the metaverse, if it happens, could totally change the way we live and work. What do you think about the future of work? Has the center of gravity permanently shifted to the home or not?
I think almost certainly it has not shifted permanently to the home, because we are social animals. There's a bunch of people who get their energy by working with other people. You can make decisions more quickly with everyone in the room. So I think that there will be a return to offices, a return to kind of places where people are congregating together in order to work. On the other hand, of course, we've had 2 years of adopting tools for virtual work, and I think that will expand the tool set. Key talent of zooming in or teamsing in from some other place, being able to have distributed companies that come together every 6 weeks, something along those lines. I think all of that is stuff that you're going to see persist, but I don't think the office is going away.
Interesting. Now, you recently co-founded another company yourself called Inflection, focused on the future of AI. Tell us more about this and where you think the future is. Where are you making your bets right now?
Well, one of the things, AI is, I think, going to transform every industry. I think we see line of sight to it from some of the amazing work that, like, for example, Microsoft and OpenAI are doing with Copilot and GitHub. I think you're seeing all kinds of things. And so with Inflection, we thought, okay, what are the things that we can most do to help give human beings superpowers when they're dealing with computers? What are the set of things that enable that to happen? And there's not a lot that we're saying about it yet, because we have a specific product idea that we'd like to test and develop out, and then kind of do the aha moment of pulling back the curtains. But it's an AI plus humanity is the theory.
All right, Reid Hoffman, can't wait to see what else comes of that. Thank you, as always, for joining us. And of course, check out the updated version of Reid's book, Startup of You.
Thank you, Emily.
All right, much more to come, including more Musk and Twitter, deal or no deal. Reid Hoffman thinks he's serious. We'll talk about that more later in the show. This is Bloomberg. A major change could soon be coming to Apple. Bloomberg has learned the company is testing swapping its Lightning charging port with the more prevalent USB-C connector. This would be for future iPhone models. This is a move Apple's making to help conform to looming European regulations. Apple's also working on an adapter that would let future iPhones work with accessories designed for the current Lightning connector. Coming up, Toast has found the perfect recipe. The restaurant software company beating estimates amidst market turmoil, but with rising pressure on consumers, does it keep up? We'll discuss next. This is Bloomberg.
This is Elon Musk being Elon Musk.
This is so Elon Musk-centric.
This is him doing what he does, which is stirring up the pot.
I want a lower price if I'm Elon Musk.
I think he is angling for a cheaper price.
He may have a problem raising the debt component here.
He certainly has a lot of negotiating leverage right now.
I would want to do anything I could possibly can do to get out of this deal at this price he set. Right? This price makes no sense.
54.20, is looking very increasingly unlikely to be the final bid, to the extent there is an acquisition.
Twitter was not as mispriced as perhaps some other equities have been.
The company is ready to be acquired, and I think Elon is attempting to kind of just lower the price here.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to stick with that story and Elon Musk, the billionaire, saying he is putting his deal to buy Twitter, quote, temporarily on hold, then later clarifying he's still committed to the acquisition. What's the market's take on all this? Bloomberg's Ed Ludlow back with the latest. And we just heard Reid Hoffman, who is a friend of Elon Musk, worked with him at PayPal. He thinks Elon Musk is serious and has a plan.
He thinks he's serious. He thinks he has a plan. You heard a lot of doubt in those voices that we just played across the market. Reality is, Twitter stock down 9.7% after those tweets, right? That's the biggest drop, believe it or not, since October. But the reason that we're following the share price in this snapshot moment in time is to track how far it's gone from the $54.20 bid that Elon Musk has made for the company. In other words, the spread. And come with me into my Bloomberg terminal. Let's take a look at the spread, because we use that as a proxy to gauge Wall Street's belief of how likely this deal is to proceed in its current form, or indeed if it's going to happen at all. You see there on the right-hand side of your screen, the spread is currently at $13.48, the gap between current share price and Elon Musk's $54.20 bid. On Thursday night, it was at $9.11, so we've really widened the spread. And in reality, the market is increasingly telling us that it believes Musk is either trying to reprice the deal, like we heard from some of those voices, or he's going to walk away from this proposal altogether. Bloomberg's been speaking all day long, Emily, to merger arbitrage specialists who put the odds of this deal at 40%.
Really?
40%. Can you believe it?
That's not high.
That's not high, but it's Friday. That's where we're at right now. Let's see where we're at on Monday.
All right, well, let's see what the weekend brings first. Ed Ludlow, thank you. I want to move on now to Toast. The cloud-based restaurant software company recently reported their first quarter results, beating expectations on top of giving a positive outlook, sending shares jumping, a bright spot in the recent spate of tech earnings reports. I want to bring in Toast CFO Elena Gomez for more talk about this and the digital revolution in the restaurant industry. Elena, first of all, look, you're facing a lot of very difficult macroeconomic forces here, prices going up, consumers under pressure. How is it that Toast is managing to keep strong results coming?
Yeah, thank you for having me, Emily. Yeah, we posted and printed yesterday some great results and beat across all of our metrics. And really that's a testament to our product resonating in the marketplace. And we're seeing really a secular shift in the restaurant industry where every restaurant is trying to digitize their operation to run more efficiently. And Toast is well positioned to capture this opportunity, and our Q1 results really speak to how well our sales team executed, but really speak to the opportunity ahead for Toast. And in the inflationary environment, with costs rising, actually Toast becomes even more valuable because we can help our restaurants be more efficient, help them manage their pricing, their menus, have them see line item by line item detail on their menu items. So we're really excited about the opportunity ahead.
Interesting, though, but how much choices do restaurants have right now when the price of food is going up? And they've got to pay their bills. How do you see inflation impacting the business, your business and the restaurant business over the next few months?
Yeah, that's the beauty of the platform, Emily. So we arm our restaurant owners with data insights and performance insights so they can look at their menu items. They can potentially increase their price if they need to. And also, we help restaurants be more efficient. It's a margin game for restaurants, right? And so if we can help them with our tools be more efficient, whether that's giving them hardware to help run their operation more efficiently, or looking at their menu prices or optimizing the food that they put on their menus, all of that is really what Toast does and actually becomes more powerful for them during this inflationary environment.
Now, Toast went public during the pandemic, and we just saw Instacart file to go public. They've, cut their valuation by 40% as they navigate this process. What do you make of them, deciding to go public now and their model, especially in the macro environment we're facing?
Yeah, I think Instacart has always proven to do a really good job of their consumer marketplace. I do think the market is a bit different, but if they have a good long-term plan, which is how we think about our opportunity, then I think that they can have a successful IPO. But I think it depends to make sure that they have a very long-term plan. And we always know there'll be different market backdrops, and that's how we think about our business as well. We're really focused on the long-term play. And as long as they really have a good long-term strategy, I think that will work well for them.
Restaurants and companies like yours are becoming more intertwined with the gig economy and the gig economy's future. And I'm curious what you think about the labor issues that they're facing, that we're seeing, especially in a tight labor market where people are just struggling to make ends meet.
Yeah, no, we're definitely seeing that as a pain point for our restaurants, and that's where we can really help our restaurant owners by leveraging our tools. If they can leverage our tools, we can actually help them effectively serve more diners even with our platform. And so a great example is we had a restaurant that had 8 servers serving 90 diners. A year later, with our platform, they served over 200 diners with 9 servers. So it just gives you an example of the power of our platform to help them in this very intense labor market.
I also have to ask, you worked at Visa in your previous life, and what you make of the fact that, crypto payments have been on the rise, and Bitcoin settled more than Visa last year.
Yeah, I think that there's a wait and see approach on Bitcoin and crypto, and we're paying attention to that, but we'll see how it plays out over time.
All right, Toast CFO Elena Gomez, thank you for sharing
your
perspective with us. Great to have you today. Coming up, we will wrap the week that was in crypto, the future of stable coins after the Terra USD debacle, and just how long this crypto winter lasts. This is Bloomberg.
Not all stablecoins are equal, right? Similar to many things in life, you can have different quality versions of the same product. UST was a highly leveraged experiment that obviously failed. You have other stablecoins like USDC and USDT that still have investor confidence, and it really depends on how you maintain that dollar peg.
It is time now for our crypto report and wrapping the week in crypto markets that was. What a week. As Bitcoin plunged as low as $26,000 Thursday, $200 billion in market value has been erased from the entire crypto market amidst the sell-off. To give you an idea, that's almost as much as the annual budget for the entire state of New York, which is $220 billion. Our crypto contributor, Shonali Bosick, is here to put it all in perspective. Shonali.
Emily, it's really amazing because you see that much wiped out of the entire crypto universe, all talking on the heels of what happened in UST and the Terra ecosystem. But Bitcoin itself, the biggest of the cryptocurrencies, really had fallen here below that very highly watched $30,000 level, and it has gotten a bit here today, over 6% of a rise in about 24-hour period, helping bring the global crypto market back up more than 6% as well. But still, over a 7-day period here, you are seeing most cryptocurrencies, the top 10 at least, mostly lower on the 7-day period, with the one exception being the other stablecoin, USD coin, which is much more closely linked to the dollar. But still, Emily, we're going to be talking about it for a while now. What does the breakdown of the Terra ecosystem mean for DeFi and crypto writ large?
Well, and it'll be interesting to look back on this moment as an inflection point in the broader crypto story. Shonali, stay with us. I want to bring in our next guest for his take on all of it. Adam Jackson is the co-founder and CEO of Freelance Labs, one of the core teams building the Brain Trust Network, a user-owned talent network that matches enterprises with technical and design professionals. Adam, thank you so much for joining us. Okay, so I don't think there's any debate. We are in the middle of a crypto winter. How cold does it get and how long does it last?
Well, look, the winter is here, the tide is completely out. And I think, this happens every couple of years in crypto, certainly, and in tech more generally. But this is a big sea change. We're going to see now that, these old systems that people were playing with, these kind of Ponzi economics, a lot of DeFi that never really generated any value, that was very self-referential, it's going away. And I think we're going to return to, this is when the scammers leave, the people who are playing games, and that all goes away. Everyone's been cashed out, zeroed out, if you will. And we're going to go back to fundamental networks that actually drive value for their users.
What does value mean moving forward? There's a lot of questions. You think about what Mark Cuban had said and the idea that more of these crypto assets need to be more SaaS-like. There's a big question about the utility moving forward for crypto ahead. What are you seeing founders and talent gravitate towards now that some of the bubble has been burst?
Yeah, sure. I don't know what crypto being more SaaS-like means exactly, but I'll tell you what the fundamental value system of Web3 is replace the middleman who extracts more value than they provide, replace it with software, right? And so move from overly extractive investor-owned networks to user-owned networks, marketplaces that are owned by the people who make their living on them. And so when you compress those big corporate margins that just all they do is misalign incentives between the operator of the marketplace and the users who make their living, when you squash those down, you give the value back to the people who are actually making their living on the network or the demand side, right? That's what Web3 is all about. User-owned networks growing faster and becoming more valuable than investor-owned networks.
What do you make of what's happening with Coinbase, where, I'm sure they would say, we're not a Ponzi scheme, we're not scammers, we're trying to bring some integrity to this market, but you look at the stock totally plummeting over the last several weeks. What's the future for a company like Coinbase?
Yeah, I mean, look, Coinbase is certainly not a scam or a Ponzi scheme. They're an incredibly valuable piece of infrastructure in the US. They're one of the most important and easy to use on-ramps to the system. They're an absolute staple, and they're not going anywhere. They're a critical piece of this infrastructure for everybody in the US.
A question I have too, it's like there's these big publicly traded companies like Coinbase where there are already massive investors. But what do you think about the VC area where some of these valuations are coming down? What is the propensity for VC dollars to go into new businesses, especially at the early stage, to help new founders really expand this market in a downturn?
Yeah, the downturns are great for building. Right. This is when it's really cold out and everyone has to be disciplined and everyone's saying, trim your budgets, extend your runway. I know it's a bit of a meme, but it's true. It's good advice. And these venture funds, look, they've already been raised, right? I mean, these, massive like Katie Hahn's new fund and these other giant crypto funds, this money's been raised. It's going to be deployed. But I think we've all learned a valuable lesson here that some of this stuff just gets a little too crazy. These self-referential business models like you see in play to earn or DeFi, as well as just these absurd valuations, right? Hundreds of millions of dollars for seed stage stuff. Party's over, right? Time to get back to work.
So where does the money get deployed if the party's over?
Well, party's over for the crazy stuff, right? And look, I'm guilty too. I was an early investor in Terra. I think algo stables are the holy grail. I was really hoping it'd work out. I took a beating like the rest of them this week. But when I say the party's over, I mean this like stuff like that's just so far out there from a business model perspective. That's not actually providing anyone any value, right? Ponzi economics, right? That party's over. We need to go back to building networks that give real value to people doing work in the real world. Our network, Brain Trust, connects knowledge workers with big clients like Nike and Goldman Sachs that need them. And because it's owned by the talent, the fees are 0 on talent and 10% on clients. That's a way better deal for both sides, right? Talent makes more money, clients' budgets go further. Win-win. That's the whole point, right? That's a fundamentally valuable Web3 network.
What do you make of what's happened with Terra and what it says about the future of quote-unquote stable coins?
Well, there's two types of stable coins, right? There's asset-backed, like USDC and Tether. Those are, you could redeem one for $1 that's hopefully in a bank account somewhere. So if there is a run on the bank, should be okay. Now, the argument against those is they're not censorship-proof, they're not decentralized, right? A government could turn them off easily, et cetera. The holy grail is the algo stablecoin, this concept of something that can maintain a peg to the US dollar, but not have full dollar backing, right? And be able to withstand an attack. And a lot of us, this experiment's been played many times. And a lot of us thought, Terra maybe the breakout. And, there's a lot of like finger pointing around, did someone attack this or was it some hedge fund in New York? And like but the answer is it doesn't matter. If there's a flaw in the system, it will be exploited. And that's what happened this week. So I'm sure it will be tried again though.
Adam, I'm really curious about the responsibility of the Terra ecosystem now that so many people have lost money. Is it completely invest at your own will here, or are there going to be chances to recoup some of these losses in any fashion? Do they owe anybody anything?
I can't speak for them because I'm not part of the core team or LFG or anything like that. I'm just like an early, investor in the project. And look, these are super risky, right? So many of these things are speculative, and you have to understand that and do your research before you go in. I did mine. I understood what I was getting into. I think I just read, a couple hours ago that, Do Kwon and the team are attempting a restructure to recap the system and hopefully make UST holders more whole.
Yeah.
I hope it works out. Yeah. I mean, look, they're not, this is not a scam, right? These guys worked hard to make this work, and I wish them the best.
We'll see how it plays out. Adam Jackson, co-founder and CEO of Freelance Labs, and Bloomberg's Shonali Bosick. Thank you both. Coming up, we're going to dive into the world of medical scrubs and accessories. Talk about how Figs is reinventing the market in the middle of a pandemic and a healthcare crisis, and how they are weathering the macroeconomic challenges afoot. This is Bloomberg. Figs, the medical scrubs and accessories company, sank 22% in Friday trade after reporting first quarter results that missed expectations and lowering its guidance. How's the company being impacted by supply challenges, inflation, macroeconomic turmoil? I want to talk about that and more with Figs co-CEO and co-founder Trina Spear. Trina, thank you so much for joining us. So look, Trina, it's a very different environment than the market that you went public in. What do you make of investors' reaction here?
Yeah, I mean, it's definitely been an interesting quarter. I mean, what we did was we really feel as though we had a great quarter, right? 23% revenue growth with 26% revenue growth with 23% adjusted EBITDA margin. We're really coupling both revenue growth and profitability in a pretty tough macroeconomic environment. We understand the response, but we feel it is a bit unwarranted just given how we are really well positioned for the long run.
How dire are the supply chain challenges you're facing, and how are you navigating them?
I think this has been going on for quite some time. We've navigated through tough supply chain environment all through 2020, through 2021. We've seen a bit more unpredictability in 2022, but we feel as though we're really well positioned, right? We are airing more of our goods in throughout the rest of this year. We're adjusting our product launch calendar, and we're able to really take action so that we can bring in our products for our healthcare professionals who need them so badly right now to get to work and help us all as, the pandemic even goes on from here.
The pandemic, as you say, it's still with us. What are you hearing from the healthcare community, and how does that translate into demand?
I think from the demand side, we feel really great, right? This is a recession-resistant industry. We make non-discretionary products. Healthcare professionals need our products to do their jobs and go to work every day. We're a replenishment-driven business. 70% of our business comes from repeat customers. But our healthcare professionals, it's been tough. And, our job at Figs is to celebrate, empower, and serve those who serve others. So every day we wake up here, how can we get our products to the people that need them most? And we're going to continue to do that.
Now, you're focused on reinventing scrubs for frontline workers, but I wonder, are there opportunities and avenues for growth in the lifestyle category?
Yes, I mean, I think that's what's been really interesting about what we've done, right? We really, before Figs, it was a V-neck top and a drawstring pair of pants. We reinvented the industry with function and comfort and style and fabric technology that none of which existed. And then on the lifestyle side, to your point, we grew that part of our business, non-scrubs, 81% year over year in the quarter. 18% of our net revenues is everything outside of scrubs as our healthcare professionals are essentially layering all of our products to go to work, at work, from work, on shift, off shift, head to toe. And it's really encouraging to see that level of growth across the business.
So last quick question. You and your co-CEO built this company together. Rare to see two women, public company CEOs running a company together. What's your advice to other executives, other founders in turbulent times like this?
Yeah, I think it's to be realistic in the near term and optimistic over the long run. We are very focused on the long term and really our community, building incredible products for the most incredible people. That's what our healthcare professionals are. We call them awesome humans. And really focus on your mission and your values, which is what Heather and I try to do here every day.
Trina Spear, FIGS co-CEO and co-founder, thank you for joining us.
Thank you, Emily.
And that does it for this edition of Bloomberg Technology. Wall Street Week coming up next with my colleague David Weston and former U.S. Treasury Secretary Larry Summers and a bunch of other great guests. They're going to be talking about Elon Musk. And next week, Bloomberg Tech Tuesday, will be on the road in Boston. We've got a great lineup of guests to talk about what's new in Boston's Silicon Alley and more. Have a wonderful weekend. This is Bloomberg.